2011, London. Two Estonian founders are fed up with their banks ripping people off on FX. They launched TransferWise, now just Wise, with a simple promise: real exchange rates, low fees, no BS. Here's how Wise makes money. Transfer fees. Every time you send money abroad, Wise charges a small percentage, usually way less than the banks. The FX spread. Wise uses mid-market rates but adds a tiny markup. Transparency is their flex. Business accounts. SMBs pay for multi-currency accounts and bulk payments. The Wise card. Debit card for global spending, monetized via interchange. And then subscriptions, premium tiers for frequent travelers like me and businesses. Wise went from cheap transfers to borderless banking, multi-currency accounts, debit cards, business tools. It's giving fintech passport vibes. Wise proves that trust and transparency aren't just good branding, they're a billion-dollar business model. From FX frustration to global domination, Wise made boring banking feel borderless. Try saying that 10 times fast. And with that, back over to you.
Hi, I'm Marcus Colston, founding partner of Champion Vision Partners, and you're watching Take It Stop.
not together yet?
Nah, everybody else.
I got you.
I asked them.
All right, yeah, I'm testing comms. 1, 2, 3, 1, 2, 3, 10, 9, 8, 7, 6, 5, 4, 3, 2, 1, 10, 9, 8, 7, 6, 5, 4, 3, 2, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. I'm JD Durkin here. I'm JD Durkin here, live from the floor of the New York Stock Exchange. You are watching Taking Stock. It's a marvelous day. Okay. One more time. Handheld. I meant handheld. That's what keep you on your toes. Yeah. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. I'm JD Durkin here, live from the floor of the New York Stock Exchange, and you are watching Taking Stock here at the iconic, the amazing, the incredible New York Stock Exchange. We have the Dow down about 4% today, or 0.4%. If it was down 4%, that would be really disastrous.
21, a Bitcoin company, started trading on the NYSE today under the ticker symbol XXI. It's another step for Bitcoin into mainstream finance. Joining me now is 21's co-founder and CEO, Jack Mallers. Jack, welcome to the New York Stock Exchange.
What's going on? Thanks for having me. How are you?
How are you? How's your day been?
I'm good. My day's been great. We're happy to be here. I feel like Bitcoin has arrived in a way. So for a founding team that's been in Bitcoin for over a decade, it feels good. It's a long way from my dad's basement.
All right, and it's fun to go public on the New York Stock Exchange.
Of course. That's a lot of
Hi, I'm Marcus Colston, founding partner of Champion Vision Partners, and you're watching Taking Stock.
Counting down to the close, today is Tuesday, December 16th, and this is Taking Stock. I'm Ashley Mastronardi. I am so excited to spend the next 30 minutes with you. We have so much news moving the markets today. Markets in the red in response to delayed November jobs report that the BLS released this morning. The report showed the cooling U.S. economy added just 64,000 jobs in November, and the unemployment rate increased to 4.6%. Markets reacted to that news with the S&P down, both on track for fractional losses. We're going to take a look at where those closed in just a few minutes. Today on Taking Stock, we're going to catch up with Jacob Sonnenschein of Barron's, Sharon Price John of Build-A-Bear, and Ross Martin of the American Advertising Federation, plus a sit-down with Bitcoin darling Jack Mallers of 21 Capital, and the latest from Money 2020, Scarlett Sieber. Now it's time for the bell. The American Advertising Federation is doing the honors for the close. AAF's incoming chairman, Ross Martin, is today's bell ringer. It's here to celebrate revealing its Advertising Hall of Fame 2026 inductees. Let's listen to the bell. Doing the honors at the Bell podium. Let's take a look at the board. I'm seeing red, S&P down almost 0.25%. The Dow is down more than 0.6%. The New York Stock Exchange Composite is down 0.8%, and the Russell 2000 is down almost 0.5%. Joining us now is Jacob Sonnenschein, markets reporter at Barron's, to help break down some of this red. Jobs numbers came out today. Delayed November jobs report. The economy added 64,000 jobs, higher than expected. What are your takeaways?
Well, first of all, number one, we also lost roughly 100,000 jobs in October, and second of all, this is a very murky jobs report. The BLS right now is trying to get a feel for how to report the numbers and what the numbers actually are. So the jobs picture overall, I wouldn't look at how things changed incrementally today. The market did not make a lot of big moves. Probability for a Fed rate cut did not make a big move. The labor market is weak. We are getting Fed cuts, and we're getting a lot of money coming in from the Fed into the Treasury market. So this is supportive of the market.
All right. What do you think people should expect from the Fed in 2026?
Oh, I think the thing I just said is one of the most important things. They're going to cut unless you get inflation moving up to 3%. They've proven that, okay? Question on cuts is how many cuts. But I think the thing that really matters, because we'll get one cut, two cuts, worst case scenario, maybe zero, I don't know. But I think what really matters right now is the Fed made clear, in fact, they said they're going to plow $40 billion monthly into short-term treasuries to keep those yields compressed down a little bit. So I think the Fed is making clear they're adding liquidity into the banking system. They're keeping rates low with as many tools as they can use, and that's going to support the economy and the financial markets.
Do you think a lot of these delayed data points that we're seeing coming out late because of the government shutdown, do you think they're going to have a big impact on the Fed's moves next year?
No, because I think at this point, all we're missing at this point is like a little bit of data here and there. We got October jobs, right? The data's going to have to be cleaned up. You're going to see revisions, and those revisions can be big. But at this point, we get it. We get the picture. If you're an equity investor, the rate of job growth is decelerating, is declining. Maybe you're losing jobs. Maybe we did lose 100,000 in October. So the point is that the labor market is weak, and that's good news because it means the Fed is going to be supportive. Meanwhile, at that point, you can expect economic growth to continue to be mild, which I do think means that you can expect the equity market to continue to do pretty well.
What risks are you monitoring right now in the market?
Well, everything I just said is a long-term risk that I'm actually kind of worried about for the state of the world, for the state of investors. So the Fed is really supportive, but you now have Oracle, which is a massive company, previously free cash flow generative, old massive software company, borrowing money. Netflix wants to borrow it's going to have to borrow tens of billions of dollars if it's going to buy Warner Brothers. You now have massive companies borrowing money to build out data centers, massive companies that used to not have to borrow all that money. My point is that the Fed is fostering an environment of risk-taking and maybe, time will tell, excessive risk-taking. So if the data center situation turns out to be bubblish, that's a problem. And I could go on. But the Fed is fostering an environment that's good for stocks in the near term, but a little bit risky in the long term.
You mentioned some big players in the AI space. Some of our experts are saying they may be seeing an AI bubble. What is your take on the bubble?
Well, I said to a source on the phone today, and he agreed with me, hey, I think the data center situation everybody knows is a bubble, but what we don't know is when it's going to pop. Google said 2 years ago, we'd rather overinvest than underinvest. Everybody's got to invest to keep their technology up to par. And if you look at the rate of growth in data centers, it's absolutely explosive. One of these days, and I don't think it'll be in the next few quarters, Meta or Microsoft or Oracle is going to say, we are massively slowing down the rate of data center investment. When they do that, expected revenues for your NVIDIAs, your AMDs, your Broadcoms, that'll go way down. And I think at some point the data center situation bubble pops, but because I don't think it happens over the next few quarters, you got to stay invested in equities right now.
All right, Jacob Sonnenschein, markets reporter at Barron's, thank you so much for joining us on Taking Stock. Let's take a walk. Jacob and I just talked about, those job numbers. And there is a lot of delayed data coming out now, economic data because of the government shutdown. We didn't see an official jobs report in October, but the BLS did report today that 105,000 jobs were lost. But experts are telling us that a lot of those were due to the government shutdown, furloughed government employees, so we will potentially see those jobs coming back if we haven't already. It's time for our NYSE notables. Today we are focusing on NYSE listed Circle. Shares rose 9.99%, almost 10%, closing at $83 per share, and that's after Visa announced it's going to start settling payments in the US using USDC, which is Circle's dollar-backed stablecoin. It's another step for crypto into mainstream finance. Visa said US partners can now settle transactions with USDC. So it's another step for crypto into mainstream finance. Circle went public right here on the New York Stock Exchange this past June. It used to be known primarily as a USDC stablecoin issuer. Now Circle says it is playing a critical role in building the Internet Foundation system and building the infrastructure that is bringing money on chain through systems like ARC. And speaking of the intersection between crypto and mainstream finance, last week I sat down with Jack Mallers of 21 Capital after his Bitcoin company went public on the New York Stock Exchange. It was an exciting day. His company had just gone public. Take a listen to what he had to say. 21, a Bitcoin company, started trading on the NYSE today under the ticker symbol XXI. It's another step for Bitcoin into mainstream finance. Joining me now is 21's co-founder and CEO, Jack Mallers. Jack, welcome to the New York Stock Exchange.
What's going on? Thanks for having me. How are you?
How are you? How's your day been?
I'm good. My day's been great. We're happy to be here. I feel like Bitcoin has arrived in a way. So for a founding team that's been in Bitcoin for over a decade, it feels good. It's a long way from my dad's basement.
All right, and it's fun to go public on the New York Stock Exchange.
Of course. That's a lot of what we want to build is a blue chip credibility and startup upside in the capital markets. We want to be the best way for the capital markets to participate in Bitcoin story. And so obviously that implies being listed, and we're happy that day is today. It's been a lot of put me in, coach, we're ready to play. And today we get to start playing, and we're excited about that.
All right, so let's start with what is 21?
A Bitcoin company. And I know that's our tagline, and it sounds simple and elegant, but it's unique somehow. right? So we view it as on one side of the spectrum, you've got a Coinbase or a Robinhood or a Kraken, and these aren't Bitcoin companies, and I'm not dissing them, but they're crypto companies or they're focused on prediction markets, equities, different ways of speculating. And the other side of the spectrum, maybe you've got a MicroStrategy, which is focused on Bitcoin, but doesn't have Bitcoin-focused cash flow and products and high margin, high growth opportunities that will ride this tech sector through its inevitable disruption of legacy finance. And Tether and I, my co-founders, we've been in Bitcoin for over 10 years. And we were like, is there really no one that's going to focus on Bitcoin in the middle? Both acquire as much Bitcoin as we possibly can because it's been the best thing you could have ever owned, and build products that focus on utility services, financial services, high margin, high growth, profit generating products.
When we sat down, you told me I can ask you anything.
Yes.
How important is transparency to your mission?
It's critical. Listen, I think the capital markets will get to know me as a public company officer as different as well. I'm young, but we're also brash and we're not afraid and we're passionate and we're convicted. And part of that is we're overly transparent because we think that the world is starved of transparency, of honesty. Nobody wants another politician. Nobody wants another older corporate suit in a blue suit in brown sneakers telling you what everyone wants to hear. They want transparency. They want relatability. They want authenticity. They want change. They want real. And that's in part what we're bringing. Bitcoin allows us to deliver financial products and a business that's far more transparent than anything the legacy markets have ever seen. And we lean into that because we believe the world has been truly starved of what Bitcoin brings.
And I think we've seen more mainstream acceptance of Bitcoin in recent years. Can you talk about the intersection between finance, traditional finance, and Bitcoin?
In many respects, Bitcoin has arrived. And I think that we're sitting here in the New York Stock Exchange. We had Cantor as our financial banking partner. We see JP Morgan Chase launching products. And I think the theme in the story here is that, Bitcoin wasn't built to be in rooms like this, to be in media like this, to have ceremonies like this, yet it's here. Despite people that tried to get in its way, lie about it, cancel it, destroy it, it made it. And it made it because it works. And it made it because it's valuable. It stood the test of time. And I think what the world is realizing is it's a public utility for everyone. And that includes Larry Fink at BlackRock and my cousin. It includes them both. And it puts us all on the same playing field. And the world is appreciating that. And it's not something to be fearful of. It's not something to be scared of. I think banks in the banking system was a little caught off guard that we can all participate in a monetary base, in a monetary system that doesn't require their permission. But now we're over that, and we accept that as a public good, and it stood the test of time.
All right. Jack Mallers, co-founder and CEO of 21. Congratulations
Thank
again.
you.
And thank you for joining us at the New York Stock Exchange.
Thanks for having me.
Time now for a few fintech, crypto, and AI headlines. First, the crypto majors are a mixed bag with Bitcoin up 1%, Solana fractionally up, and Ether down fractionally. Next up, in a story we mentioned earlier, Visa is launching stablecoin settlement in the US, allowing banks to move money using Circle's USDC on Solana, a major step toward mainstream on-chain payments. And finally, in AI news, sales of chip-making equipment are set to jump nearly 10% in 2026 as AI demand fuels new investment in logic and memory with Asia, led by China, Taiwan, and South Korea, remaining the global spending engine. And now for a little festive fun, joining us now is Sharon Price John, CEO and president of Build-A-Bear Workshop. Sharon, a friend of the New York Stock Exchange,
Yes.
Welcome back. How are you doing?
Doing great, thank you. We love the holiday season for, obviously, not just because it's so festive, but because Build-A-Bear is such a big part of the tradition of Christmas. So we're so happy to be here.
How is Build-A-Bear part of that tradition? What do you have planned?
Well, one of the things that we've done over the course of years is to try to weave Build-A-Bear into that family experience, because Build-A-Bear Workshop has always been about experience, and so are the holidays. So we have something called Mission, or Merry Mission, where the goal is to make sure that you come to Build-A-Bear in the part of the celebration, not just get Build-A-Bear under the tree, although that's fine, as well as getting those gift cards in your stockings, but having that experience together and building something like a Santa bear is a lot of fun.
And I understand you also have an exciting Hello Kitty partnership. Can you talk more about that?
Yes, and we do really, really appreciate our relationship with Sanrio. We've had it for over 20 years. And just recently, almost a year, a little over a year ago now, we opened a Hello Kitty, Build-A-Bear and Friends dedicated location in Los Angeles in Westfield Mall. And it was such a success that we're now announced recently on our last earnings call that we would be opening 2 new Hello Kitty locations, one in Mall of America and another in the Dream.
And you've been at the helm of Build-A-Bear for over a decade. You've gone through pandemic shifts, inflation, and now tariff uncertainty. How are you navigating all of these different, headwinds?
Well, one of the things that's really, part of the management of a publicly traded company is that you're always going to have some challenges. And Build-A-Bear was in a turnaround when I first got there about 12 and a half, almost 13 years ago. But in some of the things when you become a CEO, you sort of sign up for, and some of them you're like, whoa, didn't expect, to have the retail apocalypse followed by Brexit, followed by COVID, followed by now tariffs. But I think that it speaks to the underlying strategy, the power of the brand, and how good we are at fundamentals, because we've continued to find a way to navigate through a lot of these difficult times. And just this last third quarter, we announced our expectation by reaffirming guidance to see our 5th consecutive year of record results.
Yeah, and I mean, your stock is up over 20% over the past year, doing phenomenally well. What else do you attribute that growth to?
Well, a lot of the strategies that we've executed, which I alluded to, that part of its strategy and part of its management, skillful management, and a focus on delivering value to our shareholders, is that we've really pushed into the international markets in the last few years. So we're now in 33 countries, and that's been through a combination of a number of different new business models, including something we call partner operated. And we're just now reopening in Europe for the first time in many, many years, including Germany, which was one of our larger markets back when we had a franchise relationship there. So we're really excited about the runway on the international front.
And have you also seen post-pandemic really a craving to get back to experiences, right? Because that really is what Build-A-Bear is about. It's an experience. What are you seeing in that trend?
Well, as I noted, we've done a lot of things that have been important for us to make the company very resilient and profitable, and focusing on that sustained profitable growth. But we are also benefiting from some of these things that you're speaking about. There's a fantastic intersection of something called the nostalgia economy, kidulting, the personalization, experiences, families coming back together, and something emerging called a comfort economy. And we're sort of right in that center spot of many of those things. So that is a great benefit, again, to the organization, but it still is critical that you're operating in an effective way to take advantage of some of the things that are happening in the marketplace.
Great. Sharon Price Strong, CEO and President of Build-A-Bear and Friends. Thank you so much for joining us at the New York Stock Exchange for the holiday season.
Thank you. We're so glad to be here again.
So happy to see you.
Happy holidays.
Coming up, we're going to have the latest on startups' raises and rounds, plus an interview with our bell ringer from the AAF, Ross Martin. Don't go anywhere. Welcome back to Taking Stock. Today in Startups Raises and Rounds. First, data and AI platform Databricks has raised more than $4 billion in a new funding round, pegging its valuation at about $134 billion as investors double down on AI-driven growth and enterprise data spending. Next up, stablecoin payments fintech Ret.Pay is raising $107 million in a Series B round as it looks to expand its global payments platform amid rapidly growing user adoption and transaction volume. And finally, nuclear startup Last Energy is raising $100 million in a Series C round to scale steel-encased microreactors as surging data center power demand reignites investor interest in next-gen nuclear energy. And now we're going to go to an interview with today's bell ringer, bell podium guest, Ross Martin, incoming chairman of the advertising or the AAF. So good to see you. What was it like to be up there today?
Look, I love this place. There's no better place to be than here for the opening and the closing of the market. So Ashley, it's nice to be here with you and to celebrate the American Advertising Federation's Hall of Fame.
That's right. So that was announced this morning. Yeah. Barry Manilow, Marlo Thomas, who actually rang the bell. Yeah. Tell us more about that announcement.
Well, I fought Marlo for the gavel, and she won, as you saw. Look, you look at all the legendary brands and businesses that are here at the New York Stock Exchange, and so many of them are beloved today because of the marketers and the advertisers who made us love these brands. So today is really all about the best of the best in the industry of advertising, and we're here to announce, as we did today on over just a few minutes ago, the 8 inductees to the Hall of Fame.
And what does the AAF do?
The American Advertising Federation is the unifying voice for the whole industry. So publishers, agencies, brands, technology companies, many of whom are listed here at the New York Stock Exchange, we all work together to ensure a brighter future for the advertising and marketing industries.
And you're going to be stepping into a new role as the chairman of the AAF in January. What does that mean to you?
I'm the chairman of the American Advertising's Hall of Fame, which is going into its 75th year, if you can believe it. There are under 300 people who have been honored with induction. And so we're just very, very, very excited that the legends that have made this industry so special are being honored here today.
I spoke with one of your associates before, and she said she doesn't know anybody more passionate about advertising than you. What about advertising gets you up in the morning, Ross?
I just think, we have the ability, we're in the feelings business, we have the ability to make people feel something about a brand or a product, and that drives commerce, that drives our economy. And so there's no more powerful engine, I think, for brand growth and business growth than the advertisers and the people behind all those advertisements.
And of course, there have been changes in the industry. I think AI is touching every single industry.
I hadn't heard of that.
You haven't heard of
No, Ashley, you're the first to talk about AI today. Yep. No, so we have a drinking game. Every time you say AI, we have to take a shot. But yeah, look, I think there's never been a more exciting time to do what we do, right? There have never been greater changes. The tectonic shifts that we feel in every industry are certainly felt in the advertising industry. And for us, we think of it from a creative perspective and from a media perspective. We think of AI as a force multiplier. We feel like we now get to go inside Iron Man suits and do things we could never have imagined possible as marketers. And that's an exciting thing for us as an industry, but it's also exciting for the future of the economy, especially in the United States.
What has it enabled you to do so far in marketing and advertising, and what do you think it will enable you to do?
So from a workflow perspective, everyone talks about how much faster we can be and how much more efficient thanks to AI. What I like to think is, when I said force multiplier earlier, I think that our impact is exponential. And I think that's also because we're able to be so much more predictive than ever before. So we can act with greater certainty, and we can really amplify the brands that we work for in culture, knowing that what we're going to do is drive their business objectives.
All right, Ross Martin, thank you so much from the AAF. Congratulations on ringing the bell, and congratulations on being here back at the New York Stock Exchange.
Thanks so much.
All right, after the break, we're going to have the latest from Money 2020's Chief Strategy Officer, Scarlett Sieber. Don't go anywhere.
Welcome back. I'm Scarlett Sieber with Money 2020, and this is how fintech companies actually make money. Today we're going to be talking about Wise, the company that made sending money abroad as easy as sending a meme. Wise started by calling out banks for their shady FX fees and turned transparency into a billion-dollar business. Let's break down how they did it. Remember wiring money internationally? $45 fees, mystery exchange rates, and waiting 3 business days. Wise said, what if we make this transparent and make money? Enter this, 2011, London. 2 Estonian founders are fed up with their banks ripping people off on FX. They launched TransferWise, now just Wise, with a simple promise, real exchange rates, low fees, no BS. Here's how Wise makes money. Transfer fees. Every time you send money abroad, Wise charges a small percentage, usually way less than the banks. The FX spread. Wise uses mid-market rates, but adds a tiny markup. Transparency is their flex. Business accounts. SMBs pay for multi-currency accounts and bulk payments. The Wise Card, debit card for global spending, monetized via interchange. And then subscriptions, premium tiers for frequent travelers like me and businesses. Wise went from cheap transfers to borderless banking, multi-currency accounts, debit cards, business tools. It's giving fintech passport vibes. Wise proves that trust and transparency aren't just good branding, they're a billion-dollar business model. From FX frustration to global domination, Wise made boring banking feel borderless. Try saying that 10 times fast. And with that, back over to you.
We're about 30 minutes from the close of the market on this Tuesday, December 16th. The S&P still down about 0.25%. The Dow down about 0.6%. The New York Stock Exchange Composite down more than 0.8%. And the Russell 2000 down about 0.5%. This, of course, in response to the delayed November jobs report that the BLS released this morning, which showed a cooling U.S. economy. You can catch NYSE Live tomorrow morning at 9 a.m. with Kristen Scholler. She'll be counting you down to the open, and JD Durkin will be back counting you down to the close. We'll see you tomorrow on Taking Stock.
Woo!